everybody can see basically on their equity curves when those emotions kick in. Because I know everybody here, everybody has a certain approach, certain edge, certain strategy, whatever it is. And whenever you are following your rules, your strategy, literally blindly, being in this careless state of mind, which Mark Douglas tells a lot about, like trading in a zone, where you are just executing the trades, not thinking about the potential output of them, without any fear, without any expectations what the trade will bring. You're just seeing an entry and certain signal from your strategy which you were waiting for, and you're just executing it. But sometimes we will be out of this zone, and the problem is you can start trading emotionally and you will not even notice it. This is the hardest part of trading. When you start executing trades which you, in the current moment, you think you're doing a right thing, a right decision, and it has to go up, and you're convinced, or down, and you're convinced about the certain price development over time. So you are so convinced about where it will go that you're actually see it as something granted, and you're executing a trade, either FOMOing into a trade because you know already, okay, it bounced off the support and it has a certain take profit, but because it will go from the support to the resistance to your take profit, you will FOMO into a trade because it has to reach the take profit, but you don't think about something which is the setup, when you need a certain risk management rules to be in place and certain logic behind it. And also, it's really easy to get out of the zone when you start ignoring your strategy because you had a loser or several losers in a row, and the strategy stops working for you, and you think, okay, this strategy is bullshit, I need to change it to the other one. But what you don't basically see, and what I didn't see in the past, is that all the executions are mine, and this is what I do. The strategy is okay. I had used different strategies over time. I was testing one strategy today, really nice, for scalping, but it is really easy to get out of the state of mind where you're just executing a strategy and you start thinking about what will happen. And what happened to me is, like, I couldn't even notice that something is wrong with me. I noticed it at the end of the day when I saw my account draw down. And I was like, what the fuck were you doing during this time? What is it? Why did it happen? When did it happen? And what Stan said about this guy, this Polish guy, he basically has a method to always keep yourself in check. I personally call it like a pre-flight checklist. Okay, I didn't think about the points, but this is good to score yourself every trade. Just make a habit. You will put a score. Was this trade according to your edge? Yes or no. If it was, then +1. If it was not, -1. This is the easiest way to do. And at the end of the day, you will see your like behavioral scoring, because whenever you are entering a trade without an edge, without a signal, without a strategy, you're trading emotionally. There is no other way. There's only emotions can get you in a trade which is not given by your strategy. You can, or by mistake, you just click by mistake. I happened to buy something recently by a mistake, a different ticker, and I happened to be in profit, but I took it as soon as I saw that it's not the asset I wanted to trade. But those are just simple mistakes, and they can be, I don't think everybody makes those mistakes all the time. So whenever you are not executing your strategy, it's emotional trading. So you can set up, like, it's a good way. I think I will implement it also, like, in future classes. It's like you can set up a scoring for a day. So whenever you reach like minus points, it depends on the strategy, because some of the people are scalping 5-minute or lower time frames. Some will be trading 4 hours. So if you're trading higher time frames, you'd rather want to stick weekly scoring, like 5 points, 5 negative points. Like if you end the week with 5 negative points, you need to take a week off. If you end the day with 5 negative points, like the total scoring at the end of the day will be -5. You can literally end the day and take the day off. Because whenever you are on emotions, you can do nothing with them. The best way, and all the mindfulness people and all the psychotherapists will tell you, when you have emotions, you need to feel them. Uh, you need to experience them. You can't hide them away because they will get out sooner than later. Have emotions, it's better just to stop trading, go for a walk or a vacation, come back, and the market will be here. So to give you an example, like how the market can be here after you come back, I would need to share my screen. Yeah, I believe it's here. Do you see my screen, guys? Hello?
Yeah, it's coming.
Yes.
Yeah,
Yeah.
cool. Okay, everybody's listening. Okay, so this is Euro USD. I'll just remove all the indicators, which I don't need for it. So yeah, this is Euro USD. And wow, did the market really move since July 27th on the Euro USD? No, it did not. We have the same price, okay? Was it full of opportunities? Yes, it was. But you're still losing nothing. All of you guys, most of you guys are already like, you got rid of the FOMO and nobody is trading Bitcoin anymore. So there is no moon mission here. But basically every day I'll try to, I don't know, TradingView is recently so laggy. So here we have sessions, okay, and I'm trading mostly London and the part of the New York. So my window of opportunity during my trading, I start in Tokyo, something like 6:30. This is my window of opportunity. Besides, I want to, okay. So more or less, this is my window of opportunity most of the time. So every day, it's basically only this part of the price action. It's what is interesting me. I'm a day trader, I'm a scalper, and I don't like holding my trades for too long. So as you can see, there is a certain time in the market which I am physically able to make or lose money. When I don't trade, I literally lose a lot of opportunities. Somebody can say that, and there are a lot of nice trades to be made. But as you can see, those are only places in the chart which are available to me. Does it make me feel bad? Yes, sometimes it does, because sometimes the market just provides something so nice that it's like, it's really hard. You really like feel like you missed something. But when you think a little about it, we had a nice little in this consolidation, we had a nice little trend, really profitable. Then we had a downtrend. Then we actually came back to the same price and went below it. So the market will still give opportunities any given point of time until they close the markets for retailers. So then you can say, okay, I missed the opportunity of getting myself rich, because right now I can't trade without permission. It can happen. I don't think it will happen, because big players need liquidity, and we are liquidity providers for them. So I don't think it will happen. But as you can see, this is only the time I can really make any trading decisions. Even if I was to hold a trade overnight or something, like I barely do. Those are only times where I can make decisions. And it can be really hard to suppress your emotions whenever you have something like today is going on. Okay, we have really nice dumping on the Euro USD since my morning. And well, if you are trading higher time frames, there's literally no entry for a whole day. There's literally no possible entry for you to get even on hourly. While using horizontals, you could have some trades, but it's really hard when such price action, such violent move happens. Same here and same here. Okay, it was, if you didn't catch along here, if I didn't catch along here, I couldn't be I would just need to wait whole day for any other opportunity. And because I'm not counter trading, well, it would be like whole wasted day. And when it's the day doesn't provide you any opportunity, it's relatively easy to, well, I need to make money. You know the story, guys. Yeah, like I need to make money. I need to put a trade. And you start getting emotional because it's like frustrating because market is not giving you any opportunity, but you want to do something. You are a trader, for God's sake. You have to make money. This is what you are doing right now. Every other person goes to the let's say having a real job will go to their workplace and they will be making money, okay, because they're paid for time or for doing something for other people and paid for it. What you're doing basically here as a trader is like for a whole day you will be working and sitting and doing nothing, and that leads to procrastination, and you need to do something. You need to do something with it. It's just market is moving. I need to really jump into this price action. I need to do something, counter trade it or whatever. It will bounce here or here or here, and I need to trade it. I need to, because I need to make money today. And this is what really brings you, and you never know when those emotions will kick in unless you are really aware of it. So the easiest way to define when the emotions kick in is just to always check your pulse, okay? Like really keep fingers in your hand and check if you are alive. So that means that you need to always, before you place a trade, you need to make yourself a habit of checking if this trade is according to the strategy you decided to use today, or you have 2 or 3 different strategies and they will trigger whenever you whenever they will fulfill certain criteria, but still you need to decide if this trade is by using your strategy. So if it is, then well, you have a point, even if the trade didn't work. But if it's not, if you score those points, and you will see your scoring on a piece of paper, if you see like -5, the total score, well, it's time to fucking turn off the computer, go for a walk, do something else, because it's enough for you. The same thing works when you are winning. Okay, so you have a really nice opportunity. Let's say you wake up in the morning, you open your chart, and you see a really nice entry. You enter your trade, and it works out magically. Okay, you are in profit. Let's say the price is going up, and you're making money. You enter long, and what you want to do, you want to add to your trade, you want to do certain things, and sometimes stupid. Sometimes you will exit a trade, but then you will think, okay, fuck it. Yeah, it will go higher, so I will re-enter. You will re-enter the trade in a place that it's not with your strategy. So you can see like euphoria and like a feeling of winning even after a string of winners. So if you're scalping, you have 5 winners in a row. And what you want to do, you start thinking that you're invincible, that you can beat the market. Then now is the time when you got it all. Then that you already know everything, and you think that it is the day when this magical turnaround of your trading career happened. So you started making money. So you made money, and what you feel, okay, because I know everything, I can't be wrong, and you will end up with losing money at the end of the day. Even if you had a really nice entry, even if you were following the trend, but then you stopped executing your strategy because you were uh, confident in your skills, like overconfident, that you thought you can beat the market. And whenever you get into the state of mind that you think you can beat the market, market will beat the shit out of you, always. There's no exceptions. Sometimes you can get away with slight loss or probably even some profit. But the key here is to control emotions. I don't want to make you guys like a psychopaths. It's not the it's not the topic of it. We have to have those emotions, but it's really important to keep your emotions in check and always know if you're entering because it's a part of your edge or no. And if it's a part of your edge, even if the trade turned shit, that's okay. And if it's not a part of your edge and trade turned to be a winner, you should score yourself a minus. And if you collect enough of them, you should get out of the market, because it's straight way to liquidating your account at the end of the day or a month or a year. It doesn't really matter what will be the time span, but this will basically lead you to more and more mistakes. And well, yeah, this is what I have to say about this one. Any comments? Some conversation, guys? Any thoughts about it? Please.
Well, yeah, I think about it all the time, really. So.
I mean, it's also yeah.
Yeah, go on.
I think it's a very good strategy to teach young, let's say, beginners, right? I mean, this is the biggest problem, especially if you're beginning, to stick to your edge, to your rules, right? To get the good habit of, like, you know, not trying to FOMO, following your edge and so on. And also, especially in the beginning, like especially like people who start with Bitcoin, like they see those like big like gains that other people are posting, and they can get like, you know, just like, oh man, he's doing so much money, and while me trying to follow proper risk management, I'm getting like $10 and something, and like very often people get hung up on this. And this will allow you to use still lower values per money, but you can still have a sense of like making progress, because hey, I'm like plus 10 points in my, let's say, following this strategy.
Yeah, because you'll encounter many strategies in your trading career. The internet is full of them. You can go to Crown's TA program and literally select one of the strategies and just repeat it over time. And if you repeat it flawlessly, it will bring you money. Like with the EMAs, with horizontals, with DMI, whatever it is there, okay? Stochastics and other indicators. It doesn't really matter here. But the problem is in execution. So if you want to be a really consistent trader over time, it's not a work on the edge. I mean, you're not working on your edge, on your strategy. It's technical. Everybody can do it. You can just code in or ask somebody to code in some indicators for you, define criteria for entry, for exit, for risk management, backtest it. And on TradingView, you can even backtest it for free. I mean, you can code it, backtest it for free, and you will have like a general output of the strategy. So it's really like an analytical work, and it's not hard at all. It just needs some learning. But this is like hard knowledge. It's like once you learn how to code, you can think of different strategies. You can learn the strategy. You can watch the course. You can just remember it, and it will be okay. But the problem is with execution, where you are unable to consistently execute any given edge which you are using. And this is the skill which is, in my opinion, and well, I think I'm right on this one. It's the most important skill when it comes to trading, because well, you can use any kind of strategy, but if you will be unable to execute it, what is the point of using any strategy? You can just blindly bet in the market, just blindly buy and sell, and you will have more chances of winning with the market than not following your strategy. I promise you, everybody has 50% chances in the market, really, like if you don't know the market. So you can just look at the chart and say, I think it will go up in next tick. So you're making like a binary options, okay? So let's get my chart here. So we can basically bet on the market, and seeing this dildo close, we have to bet where the market will move. So right now we have to, let's say it will close somewhere here. We have two chances, okay? So we can go long or we can go short, or we can stay neutral, okay? But this is like more professional choice, okay? But you want to make a trade. So I basically, without following any TA, just on this dildo, I said to myself, okay, I'll bet on long, okay, on long side or on a short side. What are my chances when I don't know anything? 50-50. Really, because all your edge or all your like trading activity will reflect your own probabilities of winning, not the market probabilities. There is no such thing as a market setup with a certain probability in general, because first of all, everybody can see the same price action in a different way. So somebody can see a pattern, somebody can see stochastics only, or the price on the support, or for somebody it will be the resistance, because on Forex it's so many of them that sometimes it's really hard to get those zones right, especially when the price is consolidating for a long time or is in a really sloppy, like really slow trend when it's just going slightly up and down and it's really not powerful. So those are the chances, the probabilities in your trading account when you get your statistics. Those are your own probabilities. But the key is that everybody has the same chances with the market, 50%, because we don't know the future. So what the market can do here, it can go up or down, or it can stay at the same price, but it doesn't happen too often, okay? Just a flat line. So it can go up or down, and you need to bet on the unknown, and you're ending in the casino. So you start to, okay, I will find some sense in the market, what the market is doing, and you will study the market, and you will try to know what the fuck is going on behind it. But really, what is important for you? Will you take profit or not? It doesn't matter what is going behind this chart, who is buying, who is selling, what kind of news are in. Okay, it doesn't really matter. It doesn't really matter what the geopolitics are. It only matters when you will enter and take your profit or loss. And you have to take a loss with your strategies because it's a part of them. So strategy will give you a certain feel of like, now it makes sense. Now this price action makes sense. And you will think probably that because, well, the strategy has a 65 or 70% output. Well, the strategy has to be right on the market, and it is something which the market is following. This is the hidden sense behind all of it, the hidden reason why the price action is moving. The problem is if you are winning, that's good. But when you encounter a loser, suddenly your strategy is at loss. So I had the best results when I started trading. And hello, Mario. I had best results when I started trading, and I was just blindly. I knew nothing about the market. I saw the strategy, and I was just using it. And then I had some results, really good. But then I started, okay, everybody wants to learn more, and I wanted to learn more. I'm a knowledge seeker, and well, I started learning about the market and different strategies, and none of them was 100% right. So what happens next? I think too much. Okay, it looks like it's going up, but well, during the strategy is at the resistance or whatever, and I need to close I don't know. And you stop knowing, and you're like, you don't have a point of reference because you are already a little mad at your strategy because it's providing losers. So you never know when this loser will occur. And it is getting too complicated. It is getting like, and instead of making things simpler for you and coming back to a state of mind when literally you decide where the market will go on each dildo open and close, and you decide, okay, we'll wait for another dildo and we can play another game. On open we will buy or sell, and you can tell what you will do. No TA, no nothing. And you have better chances probably by doing so than most of the people in the market. But there is also kind of a strategy. So let's say for today, I will be only buying on the dildo open and selling on the dildo close and see how it works for me. But the problem is when you start disputing with the strategy. So when this happens, it can happen, well, you take your first loser or third loser or 10 loser in the strategy and you start thinking, well, I see this strategy is giving me an entry here in front of myself. I see it like flashing green or red and I just should enter. But I remember the situation in the past 2 weeks ago. I entered similar setup and it turned out to be a loser, so I will wait. And what normally happens if you wait it out and you say, okay, I don't want to enter it because last time it turned out to be a loser, I just want to wait it out. Most of the time it will go in your direction and you will feel regret that you didn't take a trade which was in front of your eyes. Because every strategy has a certain probability of winning. And we don't understand probabilities as human beings. And when you really stop following something which at least gives you any sense, any point of reference in the market, because it didn't work 1 or 2 or 3 times, or it didn't work 2 weeks ago, it's totally not reasonable, okay? And we do it by emotions because we don't want to take a loss, or I don't know, we are afraid that we will lose money, or mostly it comes out of fear. And we stop following the strategy, or we think better, we know better than the strategy, and then you see an entry on your strategy, everything is adding up, and you say, well, but I'm trading so long already that I know it's a fake out. You can't know if it's a fake out or not. Your strategy is made to give you a statistical edge over the market, meaning that statistically over time, your strategy, if it's used properly, should give you around, let's say, 65 winners out of 100 trades, or more precise, 650 winners out of 1,000 trades, with certain risk to reward ratio, meaning like for $100 you will get $200. Let's say this is the strategy output. But if you start using it and you see that this strategy promised you something, but you're not having this profit, which is promised by strategy, because normal people don't understand that if you have 65% chances that 650 trades out of 1,000 trades will be winners, most likely, nobody takes into consideration that 350 trades out of 1,000 can be losers, and they can happen in a row because this is a distribution of probability. And there can be some market fuckery around that. You will get a loser after loser. I encounter it from time to time, just loser after loser after loser. And then I know, okay, well, if I lost enough, I will just get out of the market and see it next time. Because it's from a certain degree, when you lose too much, it's not bearable. It's really you can't be really, because you have to make your like own stop loss and get out of the market when you have enough losses, because it will drain your account to the bottom until the end of the day.